Hi everyone, and thank you all very much for joining us again on this webinar series for part two, where we'll be doing a three-way cash flow forecasting deep dive and really showing you how you can build these out for your clients to help them understand what their cash flow and their profit is going to look like, maybe 1, 2, or 3 years down the road. So, as I mentioned, this is part two of our webinar series for delivering engaging advisory services with Fathom. If you haven't seen part one, I would definitely recommend having a look at that, as we do provide an overview of the full Fathom product and how each of the features work together seamlessly to provide you with that complete business advisory toolkit. So from the KPI dashboards to automated reports, consolidations, benchmarks, and of course, forecasting. So we'll be sending out an email after this webinar to all of you, and you'll receive a recording of both part one and part two of that webinar series, so you can watch that in your own time. So we're hoping by the end of the session today, you'll be able to learn how Fathom can help you add value to your clients' businesses and improve the client-advisor relationship through more efficient and more effective cash flow forecasting. So the agenda for today's session will be as follows. We'll provide a bit of an introduction into why forecasting is important for both your clients and for you as advisors, and how that fits into the landscape of business advisory services and some of the ways it can be really useful. After that, we'll look at some of the common frustrations around forecasting. They're traditionally built in Excel, which is very custom and can work for some clients. But there are really some common problems that start popping up that we hear from accountants that we speak to time and time again. And then we'll have a look at Fathom's forecasting, so some of the design principles that have gone into building the product and the ways that we look to deliver better forecasts for clients and advisors. And we'll show you some examples of how that looks like within the Fathom product itself in a bit of a demo session. And finally, in terms of a Q&A, we're not going to have a live Q&A at the very end, but our team are on standby throughout the entire session. So if you do have any questions whatsoever, feel free to shoot through those questions in the Q&A or the chat feature, and our team will be happy to answer any questions that you have as we go along. And finally, just a few housekeeping points. The webinar is going to be around 30 minutes in total, and it will be recorded. So just a brief introduction about myself to start with. My name is James Lin, and I'm an account manager with Fathom. I work really closely with our accounting customers to really help them utilize Fathom effectively for their firm, and work with them to grow their advisory offerings with their existing and also with new clients as well. So in our previous session, we spent a lot of time discussing the features within Fathom that allow you to dive into a client's historical numbers. So really understanding how a client is currently performing and how that compares against previous periods. And that's really important for every business as a starting point, right? You need to know how the business is currently performing in order to be able to make smart decisions going forward into the future. And that's really the key to Fathom. I mean, that's our purpose. We're here to provide clarity and confidence to the courageous people behind every business. Analysis of the past and the present is helpful only if it's turned into actionable insights that are going to affect the business going forward. So that's why forecasting is such a critical piece, and it's so important for every business, because it allows you to take the analysis of the past information to start planning for the future and delivering those actionable insights going forward. And this quote here from Adele sums it up perfectly. It's okay to look where you've been, but clients really want to know where they're going. And this is especially important in today's business landscape. You've got rising interest rates, you've got rising inflation and costs. Clients need now more than ever to have a clear picture of where they are, where they're going, and the optimal decisions to help them to succeed. So a few details about Fathom's forecasting to start with. What we do is provide a three-way cash flow forecast. So it's backed by the P&L, the balance sheet, and the cash flow statement. We also use the indirect method of forecasting. So we're using your prior period actuals from your chart of accounts to predict longer term cash flow. It's going to be longer term, 1, 2, or even 3 years into the future is what we can do. If you remember from our previous session, we integrate directly with your source accounting system. So we pull in the chart of accounts from Xero, QuickBooks, or MYOB, and then you can use that historical data to then inform what's going to happen in the future so that any forecasts you create can be based on the historical data that's coming through, and it's going to continue to come through as the months roll by, making sure that the numbers are dynamically updating as the months continue to go through. So there's a few ways that forecasts can be used by clients. Some of the more common ways are for internal management decision making. So by creating a forecast for internal management, you can closely monitor strategic decisions from a cash or profit perspective, just to understand a bit more about the direction that the business is heading. Forecasts can be used to create a business plan. So Fathom can be used to explore multiple scenarios and options while keeping profit and cash flow top of mind. And to provide banks for financing. So banks will really often request cash flow forecasts to understand the current and also future cash position of a business so that they're able to assess potential risk and make a decision on whether to provide financing for businesses. So you can see there's a lot of different reasons why forecasting is going to be useful for clients, and it makes it especially important for forecasts to be accurate, up to date, and easy to present. And then this brings us to the next slides, which are some really common frustrations that we've found when people build out forecasts. So as part of the research process for creating Fathom's forecasting, we spoke with hundreds of accountants in practice, CFOs, business owners, on some really common frustrations and issues with the forecasts that they're currently building. And we came up with 4 recurring themes that we found. So the first one is that forecast creation can be too time consuming. The process often includes manual data input, and that means it's easy to make mistakes, and that extends the amount of time that it requires to build that out. So one of the main complaints we heard was just time spent creating the forecast did not reflect the value that was being delivered. And accountants like yourselves, you're already time poor, so fiddling around with spreadsheets and trying to key in data manually or managing formulas just really isn't the best use of your time. The second pain point we identified was that other forecast methods aren't flexible. So you spent all this time creating an accurate forecast for the client, only to have to repeat the entire process when it's out of date a month or several months down the line. So actually 57% of our survey participants were having to update or revise their forecast every 1 to 3 months. And 33% of accountants were updating their forecast every single month. So you can see that's going to start taking up a lot of time going forward if you're doing this for multiple clients every month. The next point we uncovered is that it's hard to decipher. So with forecasts, there's so many numbers coming in from different places, each with their own unique calculations. It can be really hard to revise your figures and understand where the numbers are coming from. And then that reduces the overall confidence in the forecast, as well as making it really difficult to adapt things on the fly. If you're looking to make changes to the numbers going forward, if plans are changing, then that makes it really difficult to understand where those numbers are coming from and to do that effectively and quickly. And then finally, it can be really difficult to communicate forecasted figures. So typically we're seeing that the person who's worked on the forecast, they really understand it in and out, but then when they need to communicate it to, their managers, or they need to communicate it to the clients, or anyone that's involved in the business, it can start to fall down from there. They might not have a background in financial or accounting concepts. They may not understand, how you've come up with some of these numbers, and that can be a challenge for a lot of these accountants. So off the back of these frustrations, our development team has created forecasting with these 4 pillars as a foundation. So you can see we've listed the pain point here that we're looking to solve with each of these pillars. So, we mentioned forecasts can be time consuming. So we've tried to make sure that forecasting in Fathom is efficient to build and to maintain into the future. It's adaptive and relevant. So we're allowing you to leverage the work that you've already done, not have to jump in and redo the work every month, quarter, or year. It's auditable and transparent. So we want to make sure that every number can be drilled into so you can easily see where it's coming from and also the logic and reasoning behind it. I'll be referring back to this point quite frequently when we jump into the demo portion of the actual product. And finally, it's approachable and actionable. So we want to make something that's easy to work with your team, easy to communicate with your clients about potential options and about the next steps. So when we build a forecast, there's a 5-step forecasting lifestyle that we like to think about when you're creating a forecast for a client. And you can see the 5 steps here. They're baseline, plan, explore, report, and monitor. And if we switch over into a bit more detail here, baseline is referring to what's going to happen if my business continues on its current course. So what happens if we continue business as usual? And then you have plan. So after you've set up the baseline, let's plan for the future. What are the projects or events that we're looking to run in the next financial year? Or what are these projects that are potentially going to help our business that we'd like to model out into our forecast? Then you've got explore. So what happens if we implement different strategies at different times? What's the best timing and combination of those different future events? Report. So how can I report on this forecast effectively to my team and to my clients? And then finally, monitor. So how can I keep this forecast relevant for decision making throughout the year as the new actual data rolls through every single month? So that was a bit of an introduction of Fathom's forecasting and why that might be important for you and your clients. Going forward, let's step through the actual Fathom product itself. So we'll jump into the forecasting tool and I'll just run you through how you can set up a baseline for our forecast. So we'll run through this 5-step process and let's start with the baseline. So what we've got here is the main screen of Fathom. If you recall from session 1, we went through this previously as well. It's where we've got a list of all the connected entities that we've imported into our Fathom account. So at the moment, you can see we've got a couple of Xero files, a couple of Excel files coming through. We can also import from QuickBooks and MYOB. And then when you hover your mouse over any of these files, you've got access to the core features of Fathom. So the analysis, the reports, and the forecasting. And that's the same for any consolidated groups that you're creating as well. So for today, let's jump into a forecast. So if you remember from that forecast lifecycle stage, the first step is called baseline. So this is really what we want to focus on initially, is modeling out or projecting out business as usual. Based on what's happened in the past, what is our business going to look like in 1 year, 2 years, or 3 years down the road? So just in terms of navigating what we're looking at, this is the main forecasting screen. At the moment, we're looking at our profit and loss. So you can see our revenues, our cost of sales, expenses. We've got the option to view our balance sheet and also our cash flow statement as well. So most of the work is going to be done in the profit and loss. If I scroll to the left here, we've got a couple of date ranges coming through. You might be able to see from August and before, the cells are grayed out. So if I click on any of these cells, you can then see that this is actual data that's coming in from our accounting system. That's the reason it's grayed out. This is previous data that's being pulled in from the accounting system. So we can't change that at the moment, but what we can change is if we scroll to the right, all of the white cells are our forecasted values into the future. And if we click on any of these cells, this pulls up the panel where we've got a couple of details about this particular account. So for this sales tours account, we can see the last 12 months of how that's performed, as well as the next 36 months of forecasted data. You can see it's kind of repeating itself over and over, and the reason for that is listed here. So we're using actuals from last year with an increase of 5%. So you can see it's slightly trended upwards. So this is the rule that we've applied to this particular account to calculate it going forward. And that's really the first step of building up the baseline, is thinking about, how would I like to calculate my forecasted figures going forward? So this is one of the options. There are other options that we have available to you. You've got things like using linear regression, which is like applying a line of best fit based on the last 3, 6, 12, or 24 months. They can also include seasonal adjustments. So if you do have a bit of a seasonal business, you can tick this checkbox here. You've got options like using average results, again, using the last 3, 6, 12, or 24 months. You can also apply a monthly increase or decrease. So maybe if the business is improving, there's some business growth, you can apply a percentage or dollar increase or decrease there. Other options are linked to previous periods. So this is what we saw earlier, where you can use actuals from last year. Again, you can apply that monthly increase or decrease. You've got options for constant or growing values. So this is great if you've got some fixed expenses, for example, that you know are staying the same, you can apply a constant value to that one going forward. And then you've got the ability to create your own formulas using drivers. So this is really where you can get quite custom with how you're calculating your figures. If you've got a cost of sale account, for example, that's typically 30% of a revenue account, you can actually link them together with a formula. So that way, any changes you make to the revenue account is automatically going to be reflected in that cost of sale account. So in terms of the driver section, you can see across the top, we have a section for these drivers. So this is where you can actually model out any external data that is not currently in your profit and loss or balance sheet that you'd like to use to calculate your figures. So a couple of examples here. Some businesses don't like to forecast their revenue dollar figure, but instead they know how many units they're going to be selling next month. So what they might want to do is model out the number of units sold in the driver's grid, as well as the unit price of that particular product. And that way they can come up with a revenue figure for one of their product lines. So that's a potential example. You can see a couple of other ones here. We had a meat processing plant that was using volume of lamb multiplied by slaughter price. A little bit dark, but that was the way that they were calculating some of their revenue figures. So that's the first part of building out a baseline of your business, is understanding what are the numbers that you'd like to use to calculate for your forecasted figures going forward. The next section is just below, where we can specify the way that the P&L values are timing down into the balance sheet. So you can see at the moment, I've set up a monthly profile where 50% is being collected in that same month, 30% in the month after that, and then 20% in the following month. So we can set up a completely different profile. You can specify the percentage values here, or you can even change kind of the collection cycle. So whether that's monthly, quarterly, or annually, or bi-monthly or biannually. Just noting as well that for any changes that you make, whether it's to the value rules or the timing profiles, there's a section at the bottom that allows you to add in notes. So this is a fantastic option to justify the reasoning as to why you've made these changes. This is especially useful if you're needing to communicate this to other people in the business. As we mentioned, auditability and transparency is a big thing in Fathom. So we've allowed you to set up any notes or assumptions here, and then you can also include that in an assumptions report in the future going forward. So let's just keep note of that, and we'll show you that assumptions report when we view the reporting section. So that really is the summary of the baseline. The first few steps that you would take to set up kind of business as usual for your clients over the next financial year, as well as the second and third years as well. Next up, if you remember, our business life cycle is plan. So every business, we've got business as usual, but we also have different plans and projects that we're looking to include, and we want to model out the effects on our profit and cash flow. So on the left-hand side here, this third tab is called micro forecasts. This is where we have a list of all the different plans and projects that we're looking to run. And each of these is a kind of mini forecast, which contains all of those financial impacts. So I've got a marketing campaign here. I've got some hiring events, looking to purchase some assets and also take out a loan. So I can click on any of these micro forecasts, and that brings me to that micro forecast grid, where I've got a visual or a view on all of the financial impacts that are currently being modeled out for this particular event. So in our marketing campaign, we're looking to incur some marketing expense in November, and we're also looking to get some direct impacts to our sales account based on this marketing campaign. Now we can actually view all of this from a visual perspective using the business roadmap. And this is where we start to move into the explore section of that business, that forecasting lifecycle. So this business roadmap is a visual depiction of all of those different micro forecasts. You can see the marketing campaign, the sales truck, the different hiring events, and also the loan. So we can see exactly when it's starting and also some of the cash impacts over time. Now, just drawing your attention to the bottom of the screen here, you may have noticed it, but it's always available when you're using the Fathom forecasting. We call it quick metrics. So this is allowing us to keep an eye on some of the core metrics for our business. At the moment, cash on hand is being highlighted, and you can see how that's performing on a month-by-month basis, and whether that's in the green or whether that's in the red. So we can actually open this up to see some other metrics as well. We've got things like gross profit, operating profit, and our earnings. But essentially, this gives us a bird's eye view on these core metrics, and any changes that we make to our forecast. So for example, if we move our marketing campaign, for example, this is going to update our cash flow and our profit in real time. So we can start making decisions in a real time basis by moving some of these things around. So if you remember this marketing campaign that included hundreds of financial figures, everything now is starting in December instead of November. So this is a really quick and easy way to, identify problems on a monthly basis. So we can see for December, we're short on cash. Maybe we need to move our loan to coincide with that marketing campaign. And now we're all green for all the months to come. Finally, you've got scenarios, which is the fourth tab on the left-hand side here. These are higher level macro scenarios. So maybe you've got a best case scenario where revenues are going up, costs are going down. Maybe you'd like to model out a worst case scenario. You can see I have an option. I've modeled out inflation increasing by an additional 5%, just to account for kind of the current inflation levels. And that might be a 5% increase to my costs and expenses, for example. So this allows us to essentially create multiple forecasts or multiple strategies for different future scenarios. So in our best case scenario, I now have a completely different set of strategies for this particular best case. So I don't, revenues are going up. I don't actually have to run that marketing campaign anymore. I also don't have to take out that loan. So you can see, despite removing those two events, I still have enough cash to go for the months to come. On the flip side of that, if we switch over to inflation increasing by an additional 5%, that particular scenario, again, a completely different strategy because costs are going up. We're still running the marketing campaign, as you can see, but in this case, we're going into the red. We don't have enough cash to actually run this campaign. So it might be prudent for us to actually scrap this campaign, or maybe think of some other strategies, maybe increasing our prices, for example, and having that as a separate micro forecast to kind of alleviate the pressures there. So that is a bit of a run through of the first three sections of that forecasting lifecycle, where you've got building out a baseline of the forecast. So essentially, if we take business as usual, what's that going to look like 1, 2, or 3 years down the road? Then let's start thinking about plans and projects that we'd like to include and sit on top of our main forecast. What's the best timing and combination of these events? Should I turn some of these on or off? Excuse me. Should I move them left or right based on how the cash or the profit is looking? And then building out multiple scenarios. So best case, worst case, inflation increasing, or any other scenario that you might want to think up, and then creating an optimal strategy off the back of that. So the next stage of the forecasting life cycle is report. So how are you going to report and communicate this forecast to other stakeholders of the business? There's a couple of options for this. First up in the bottom left here, you've got the option to download. So you can always download the forecast into PDF. So let's just go ahead and select that option. So we can download the Excel, whichever scenario that you've selected. You can select the profit and loss, balance sheet, cash flow statement, and select the date range. So you can have 12 months of actuals and up to 3 years of your forecasted values going forward. That's certainly an option, but Excel can sometimes be a little bit difficult to communicate to other stakeholders in the business. So for that particular purpose, we have the reporting section of Fathom. So if you recall, Fathom is a fully integrated platform. So when you create a forecast, that actually becomes available for you to use within the reporting section itself. So if we go ahead and jump into one of our reports here, let's say it's a monthly review / action plan. So this is a report that I've set up that you can customize. We have some standard templates as well that includes a lot of this information, but I've added in a cover page for the online version. You can see that for the PDF version as well. Here we've got the option to include a cover page if you are looking to print this out for your clients going forward. Bit of an executive summary here, so some text coming through. Just wanted to highlight that we've put in some placeholders for the numbers. So if I were to create this report again for the next month, all of these numbers are going to update based on the numbers that we've pulled in from our accounting system. So this first section is kind of looking historically, looking at our past numbers that we've got from Xero, QuickBooks, or MYOB. But now this later section, you can see we've got our business plan coming through. So whatever we have modeled out in that business plan, business roadmap section is going to be highlighted here. So fantastic way to print this out as a PDF and give it to any other stakeholders to view this in an online or print version. This particular chart is very handy to review how the impacts of your scenarios is going to be on your business. So in this particular case, we're looking at our revenues. So you can see how that's going for the months of June, July, August. And then once it hits our forecasted values, that splits out based on the different scenarios that we've set up. So in our case, we had our main forecast, which was the blue line. We had inflation increasing. Maybe we modeled out some price increases there, which is why revenues are increasing. And then you've got the best case option, which is that green line at the top. So really, really fantastic visual depiction of the different ways that revenue or any account is going to be changing based on those different scenarios. You've got the option to include some cash flow charts as well to see how that's projecting into the future. So these are your forecasted cash flow figures. We've got a rolling 12-month forecast here for your P&L and your balance sheet. And finally, we have a forecast assumptions grid. So as I mentioned, anytime you make changes to the value rules or the timing profiles of your accounts, you've got the option there to include an assumption note, and then you can tick the checkbox to include that in the assumptions report. So this is the assumptions report that you'll receive, and it'll show you a list of all of the different notes or assumptions that you've listed out in your forecast. So a fantastic way for anyone looking after the fact to kind of go back and see the justification or the reason and the auditability of those different notes. So again, these reports can be printed out into PDF version. You can also view them online. And that really brings us to kind of the final section of that forecast lifecycle, which is monitor. So in the forecast, Fathom is pulling in the actual data from your accounting system on a daily basis. So we have that daily integration. Every 24 hours, we're pulling in any changes from your accounting system. So that means on a month-by-month basis, your new data is going to roll through into your forecast. And if you've set up the rules correctly, that's going to update the forecast based on the new figures that have come through. So, it's a dynamically updating rolling forecast that is constantly updating based on new actuals. And that's going to update your forecasted results, which you can then set up new reports for using our custom template section. You can even schedule reports to be automatically created for you on an ongoing basis. So you can really start to automate the whole process of building out your reports, kind of rolling them forwards, and then having that data included in a regularly scheduled report. So that's a bit of a summary of the forecasting feature within Fathom and how you can follow the forecasting life cycle to really help you to build out a forecast. So hopefully it is quite an intuitive process, but we do understand if it does seem a little bit overwhelming. So we also partner together with you rather than just letting you figure things out on your own. If you do get started on Fathom, we've got a 14-day free trial period where you can test out all of the features yourself. And we have a dedicated engagement specialist who will be on hand to help you set things up for the first few clients. If you're happy with the platform and you've decided to go ahead, we then work with you to really set up custom training roadmaps for yourself and for your staff so that everyone in the firm is on board with utilizing Fathom for your clients. And this can be a really great experience for junior staff to be involved in this work as well. It just helps the adoption and the rollout of Fathom across your entire firm. And then finally, if you're using Fathom, you've got access to our award-winning customer support teams. We just recently won a national award for Customer Service Organization of the Year for small businesses. So over 600 applications to the awards this year. So we're really quite proud of the ongoing commitment and support to our customers. So I hope that was a really helpful session. If you do have any questions going forward, feel free to take down my email address and just shoot me a message. Otherwise, thank you very much for your time and attention today, and hope to speak to you all soon. Thank you.